All right, Alcoa just released its second quarter earnings, marking the official start to the latest earnings season. The aluminum producer reported a loss of 26 cents from continuing operations. It's its third quarterly loss in a row, but it is much better than the 38-cent loss we were expecting. Joining us now with his reaction is Jeremy Blackman, portfolio manager at Hester Capital Management. They manage $1.5 billion of assets, including 400,000 shares of Alcoa itself. And Jeremy, let me ask you first, what about the fact that there's no outlook here? We're all expecting forward-looking statements in this season to kind of drive the markets. Are you disappointed?
No, I'm not really disappointed. I think we heard some commentary yesterday. If viewers aren't aware, Kleinfeld is traveling with Obama in Russia and released some comments out basically saying that a number of their end markets he feels have bottomed. And China itself, actually, he feels is actually coming back, and it's going to be strong on this point forward.
So that'll be...
So I think he just didn't feel...
Are you expecting that to be the growth engine for Alcoa then going forward?
China is certainly the growth engine. It really dictates the supply-demand fundamentals of the industry. China really is a major component of how Alcoa is going to perform in the next year and a half.
It's interesting that, you know, a lot of tech companies that we saw reporting in the last quarter were beating on the net side but missing on the revenue side. So obviously the better than expected profit coming from cost cuts. Alcoa has been an aggressive cost cutter itself and reducing capacity, as Adam Johnson's been telling us. But they beat on the revenue side as well. Is this a major plus?
That's definitely a surprise. That's actually where I thought they would come in short. The cost cutting they've done, from what the numbers, not really digging into the notes yet, that was great. I think they benefited from the surge in aluminum prices over the quarter. We're at 71 cents a pound currently. We were as low as 63 cents just at the end of May. So the spike in prices, I think, has really helped them, and you can see that where it happened in the revenue.
What do you think we're going to look at as far as aluminum prices going forward?
That's really the juggernaut here, and I think what we're looking for as far as pricing is really demand, and whether all this so much fiscal and monetary stimulus has occurred across the globe. So it's just waiting for this to take hold. Once it does, demand will increase precipitously, and we think that Alcoa from there and the rest of the industry, the aluminum prices will react to this increase in demand.
Are you expecting the stimulus actually to produce a sustainable increase in demand, or could it be that we see kind of a blip here and then a drop again?
I think it's large enough that it will be sustainable. China's stimulus in particular is massive, and it's really centers around the end markets that Alcoa participates. So I think when you see you can use Alcoa's earnings as a bellwether for how the stimulus is taking hold. So if we start to see improved results in Alcoa's earnings, I think that will show that some of these stimulus packages are actually working.
And let me just ask you quickly, only about 10 seconds left, but speaking of bellwethers, what does this mean for the shares in the markets tomorrow?
I think it should be a positive reaction. You've kind of seen the stock trading in a range from $9 to $11 in the last couple of months. People are trying to game the outlook that Alcoa is coming out with. I think what this is showing is that internally, Klaus Kleinfeld's cost cuts are working, and I think that, you know, if they can get this to stick going forward, once we see a rebound.
Jeremy, thanks very much. Quick break here.